All right, we're back. We're going to talk about the last category of funds, fiduciary funds. And of course, for fiduciary funds, you need a statement of net position. All right, and it's pretty basic. Assets minus liabilities equals net position. For agency funds accounting, the equation is assets equal liabilities. Why? Because it's an agency, we're using up all the assets. Fund basis statements, changes in fiduciary net position. Explains the change in fund resource. Now remember, the point of fiduciary funds is they're being held in trust for somebody else and spent exclusively for that other purpose. All right, so the pension funds that have been collected from me and my employer are sitting in a little fund with my name on it, and it only goes to me, hopefully, someday when I retire. All right, so the statement of changes explains how the fund resources came and went, right? So certainly there's not net income. That's not a goal here. We're not making money by holding pensions this size. So they take my money and they invest it somewhere, put it in some bond funds and some equity funds, and so my money is earning some interest. And then when I'm 65, I'll get to collect some of it. And so they'll be paying it out, right? So it's coming in from payments, it's coming in from interest and earnings, and it's going out in the form of benefits. And they probably have to pay some people to manage the funds, stuff like that. So the statement of changes for the fiduciary funds are additions minus deductions equal change in net position. Change in net position plus beginning net position equals ending net position. Right? Makes a lot of sense when you think about what it's for. Once we get done with all those statements that we've prepared, there need to be some notes. Just like your for-profit enterprises, government has to have notes to the financial statements to explain accounting. That's what notes do. They explain accounting policies. So Target might have some notes that explain how they do their LIFO or FIFO for inventory. Might explain their tax positions that they've taken. It's basically a summary of, you know, how we've decided to do the accounting here. And so this is the first note you're going to have, is how they do their accounting, what funds use accrual and what funds use modified accrual. All right, so people need to understand that, so when they go to reconcile them, they can say, oh, okay, this makes sense now. It explains why you made a choice. So right, if there's more than one accounting position you're allowed to take, you can choose. You say, well, why did you choose that? And of course you have to choose them because it is more transparent. It makes the financial statements better present our position. It's conservative, right? So you can't just like, oh, I'm picking this one because it makes us look better. You know, you have to pick the accounting approach that is most truthful. There is some RSI, required supplementary information. So that comes at the very end. So this is different from the MD&A, the Management Discussion Analysis. The MD&A comes at the front, kind of tells you what to expect from the statements. The major RSI items are the budgetary comparison, information about infrastructure assets if a modified approach. So we haven't learned this yet, but under modified accrual, instead of depreciating something, you might estimate what percentage is in good condition. You know, it's slightly different. So a depreciation expense is an accrual, clearly, right? So maybe I'm not going to do that. All right, maybe I'm going to figure out my asset value some other way, and that's modified accrual. So we'll learn that. So, but just keep in mind, okay, things that we accrue, like depreciation, maybe we do that differently under modified accrual. Revenues, again, tax revenue. When do we say we get that revenue? that would apply to modified accrual. All right, so but just keep in mind, you have to explain, how you do that. And you have to have your budget and information about pension plans, right? And risk pools, things like that. So important information that's just not necessarily part of the financial statement numbers, right? But how did we get to those numbers? What do you need to know risk-wise about these numbers? And of course, there's going to be a budgetary comparison. When I say that the city gets the budget that they get, I don't mean it's like carved in stone, but pretty much they have to follow the budget, right? So the city gets together, they vote on a budget. Here's our budget for the year. Departments, you have to follow this budget. And so the budgetary comparison shows original budget and actually what we spent, right? And it's similar to a budget and a budget variance, but it's just a kind of a total column. They don't really go into that whole variance for why or all that. When your budget is different from your fund statements, you'd need to show why, right? So an actual complete CAFR will provide additional details beyond the main statement. So that's why if you go look at some of those examples, I think the state of Texas is a few hundred pages long, right? I mean, it doesn't take more than a page or two to show a financial statement, but to explain where all this came from and breaking out individual funds, setting up individual schedules for each university, right? Individual schedules of everything, right? Out in the back. So you can go to the back. Okay, well, I see you've got this number here for net position for universities, but what about each separate university? So you go to the back and you go to the combining an individual fund information. So yes, if you look on the fund statements, you'll see a column for the waste services department. But it may combine, all right, the garbage pickup, the brush pickup, and recycling. All right, so you may go to the back and look at some combined information about all those three that are in the waste services column, something like that, right? So you're going to have a lot of separate individual fund stuff that's been combined into one fund. You can go to the back to the RSI and look at individual fund stuff. All right, now I feel like you may want some additional information about how to read those statements. So there are going to be some additional videos that take you and look at the statements as presented in Chapter 2. So we're going to go through some of those financial statements in Chapter 2 for the city of Salem. And I'm going to show you, okay, this is what you subtract from this. This is where we get this. This is where this total comes from. So if you want to watch some of those, it may help you understand a little better where those numbers come from.